Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor, and it is Wednesday. There we go. I think we're back. Come on, there we go. There's the camera back. All right, a little bit of a technical difficulty there, but it's Wednesday, and the market, kind of interesting day today, sort of moving up a little bit, but there's definitely one stock that I want to show you right now. Of course, that's a stock you've probably heard of. It's Apple. And it has been basing for a long time, but now it appears it is a very interesting state. By the way, this is the largest holding that Berkshire Hathaway has, and it is Apple. For a long time, for many years, Warren Buffett would not buy a tech stock, but that has changed. Definitely changed, and now the largest holding is Apple. So there's an interesting opportunity here. It hasn't really been in a good situation for a while. It's not been viable really. It's been pulled way back and hasn't really given us a good opportunity. But that hold on. But that is changing, and so for everybody out there on TikTok, just wanted to show you the chart here. And what's happened is it's come all the way up above that very critical 200-day moving average, and we are starting to. And it did peak out, and then it's pulled back. It pulled below the 10-day line, and it looks like it's gotten support on the 21-day line. Now, that is a very good place to buy it because studies have shown that the 21-day line, if you can get support of the 21-day line, that's looking pretty good. Now, the interesting thing about this, finally, the relative strength is strong enough. It's 89 currently, and as you can see, I haven't really been in it since way back here in February, and I've just kind of been watching it, and it's been pulling back and pulling back and pulling back, and finally, it's made this move up. So, I think that we may be in a situation where we could buy it. Now, the actual buy point on this one is 182.94, so that's right up here, basically this consolidation base. But what's critical here is that this red line here, which is the 50-day moving average, is starting to move up. Also, the 200-day moving average is starting to slope up, so this is a very good sign. What they call the golden cross is when the 50-day line crosses above that 200-day line, but it's looking like it's starting to make a movement guy. So let's kind of take a look to see. Now, I'm currently not in the stock, but I'm looking for an entry. And currently the checklist is good enough for me. It's a 78. I typically would like it higher, but beggars can't be choosers, so that's pretty good. The sales were up. We're not up 20% last quarter, so that's not necessarily the greatest. But this is one of the largest held stocks out there, and the earnings per share isn't quite as much as I would like to see it. But overall, it's up, so we can actually start a position here in Apple, and because I do think that it's going to get some support at the 21-day line. That's this green line here, and that might be a very good opportunity. So just kind of put that in the back of your pocket there, and we may be able to go to that to get to something that really might be kind of a good entry point towards the end of the year. So let's see if we can get into that. But we haven't really had this for a while in Apple, and definitely is welcome. I did buy some stuff today. I just kind of wanted to show you that. But first, take a look at the bulls and the bears. Obviously, you can't see this on TikTok. If you jump on over to www.youtube.com/Dallas Trading Floor, you can see all these charts that I'm showing you. I can only show you some of the charts on TikTok. Unfortunately, I can't show you them all. Interestingly enough, the bulls versus the bears. The bears are starting to retreat, which is kind of interesting. I mean, I've been waiting and waiting and waiting and waiting, And you know, with the spider moving down, I was thinking, wow, you know, we may have a long ways to go. But today was very, very constructive in terms of everything that I'm looking at. And just wanted to show you that basically what I currently am in. Currently, I have a position in Chenier that was up today. Also, PBR, which is Petrobras, that's another one that's up today. All these bargain outlet. I did increase my position in Celsius Holdings. I want to bring that chart up here. Symbol on this one is CELH. And what Celsius is, of course, it's a drink company for a white lot drink, which seems to be doing very well. It's up in the after hours. Very interesting stock. I did add to my position here in Celsius. I've been making several buys, and let's see if we can get that kind of so you can see it. Go. All right. So you can kind of see what's going on there. I did make my initial buy back here on the 11th, and made a full position buy at 103.56. Currently, it's at 115. So definitely it's made pretty good progress. What happens is, of course, I bought it and it pulled back. Now this is why that green 21-day line is so important. As you can see, and this is kind of what I think maybe in store, hopefully for Apple as well, is that when it pulls back, wait a minute, we had a glitch there. Let's go back to CELH. Go back to that chart. Celsius Holdings. When the stock comes back and it goes back down to that 21-day line, typically that's where you want to see it get support. If it does, it'll move up. So that's exactly what happened with Celsius here. It moved down to, oops, there we go. It moved down to the 21-day line, got support at the 21-day line, and moved up. Now currently, in the after hours, Celsius is 115, close today at 113.54. It seems like there's a lot of accumulation going on here by, I don't know who, but definitely accumulation coming on here. The prior high point was 110. I'll show you that there. And it kind of, this is key because it looks like it held above that 110. So that is sort of a green light for acquisition. And I do think we're going to get quite a bit of acquisition on this one. The symbol on this one is CELH. Now this has a 8 out of 9 checklist. Just wanted to show you that. The only thing it really is lacking here is the EPS rating of over 8. It's just starting to turn the corner and become profitable. But what's significant about Celsius is the fact that, of course, they've got that distribution deal with PepsiCo, and that definitely is probably going to make a big deal. Typically, every cycle, there's going to be a drink company that is out there that is going to make headway. The last cycle, of course, it was Monster Beverage, and of course, everyone heard about that. You know, Hampton Natural, which is what the Monster used to be called, had been around for years and years and years, but they got a deal with their energy drink distribution with Coca-Cola, and that changed everything. Now, Monster, I believe, has a deal with Pepsi and also with one of the alcoholic beverage companies, which is kind of interesting. But that's definitely one to watch. Celsius, CELH, and it was up today. Now I did. I'm also in On Semiconductor. That's turning the corner. This one is, fortunately, this one is not fabless. This actually has the capability of making its own chips in its Arizona facility. So this is an interesting one. Many of the chip companies like NVIDIA and companies like that are constrained because they manufacture their chips with TSMC, and of course they're having issues with capacity. Interestingly enough, On Semiconductor, it looks like it's turned the corner here. We didn't come all the way down and test the 21-day line. Typically that's where I like to buy it, but we seem like we're bouncing and moving higher off that 10-day line. So the 10-day line definitely is a good place to be buying. But On Semi is heavily into the automotive chip space, and they have a fab in Chandler, Arizona. Of course, it's state of the art. And one of the good things about this is that there is a backlog and demand for automotive chips, processor chips, and GPUs and those kind of things. Not quite as big a demand, but the semiconductor chips that are in automobiles still backlogged. GM has essentially very large, I know that here in Dallas, there's a facility that builds the Escalade in Arlington, and they have a lot full of trucks right now that they cannot sell because they're awaiting chips. And of course, many of those chips are made by this company on semiconductor, symbol ON. Off a little bit in the after hours. It was up today, 72.03, and it closed, and then it's off a little bit in the after hours, 71.88. And it does look like we're getting some support at the 10-day line, so that's looking pretty darn good. Also, I did add another chip-related company here. This is a company out of Beverly, Mass. It was a spinoff from a company called Eaton, which you may have never heard of, but it's a very big company, and they are in the semiconductor manufacturing space. This is a robotics company that makes many of the robotics that are used in the very, very dense chip manufacturing business, and I do think that this one has a good future. The symbol on this one, ACLS, you probably never heard of it, but they do sell all over the world, and their products make the yields for chips much larger. So that's one of the things that they're focusing on is process and process control products for the chip manufacturing business. This is a company called Axcelis Technologies out of Beverly, Massachusetts. Of course, it's a spinoff from Eaton Corporation. So they're very well funded. I did buy a half position at 73.07 today. We're down a little bit, close at 72.39, but I did buy it right at the 21-day line. Again, that's a preferred area for me to buy at that 21-day line, where we typically will get support. This is a cup with handle formation, so it's looking pretty good. And let's look at the checklist on this one, just to kind of get an idea of what's going on here. It's got a 100% checklist. This is quite rare, especially in this market. Even though we're in an uptrend, it's a weak uptrend. And so this is not an easy market to be buying, and I'm not buying full positions, as you can tell, mostly half and quarter positions. But this has a 100% checklist. On the pattern recognition, we are about 9% below the pivot. The pivot, of course, is on a cup handle, and that's at 79.83. So interesting place, interesting company that you might want to take a look at, maybe Google, just to kind of get an idea of what's going on here. On the small portfolio, this is something that I do. We're up on basically, we have 4 stocks in the small portfolio, with mostly being in cash right now. And in the small portfolio, we're basically up on 3 of them, so that's pretty darn good. Oops, wait a minute. Let's see if we can. There's got to be an easier way to do this. But anyways, let's see if we can get back to a little bit of a technical difficulty there. TikTok is very difficult to broadcast live because it does not allow you to broadcast from a desktop. So that is a bit of a problem when doing TikTok. So hopefully we can see it there. All right. So I'm going to jump on back to my mug here. Let's see if we can do that. I think I need to get some more stand there, but let's see if we can try that again. There we go. All right. So this is Axcelis. Symbol on that one is ACLS, and it definitely is kind of an interesting stock. I want to get back to the small portfolio again. Most of these we are doing pretty good on. The average hold is about 21 days currently. And we're up on all 3 except for Ollie. We're a little bit down on that. We're down about 1.42%, but everything else is up to 7%. So we're doing okay for the month. We're making progress of about 5 to 6% up overall per month. So not a bad number at all. All right. So let's get into the comments. Thank you for holding so much. And let's see, always the first one out of the base. Absolutely love EQNR and SLB. Bought yesterday. Both are killing it. Absolutely. Let's take a look at EQNR. I definitely want this one. Thank you for that. EQNR, and let's see what's going on here. Yes, very nice pattern. This is a Norwegian oil company, and definitely the oil and gas area has been very strong, and this is a good place. It's a little bit extended here. I wouldn't necessarily do another buy here. I'd wait for it to pull back, but I definitely think you can definitely buy it here. This is an interesting company. Definitely agree with you on this. Let's see if I can get this, give this a little bit more of a lift here. I'm just trying to see if I can. There we go. Does that work? I hope so. I need to get more things that I can. There we go. All right. So that's showing EQNR here for everybody on TikTok. It is a little bit above that. It is a little bit above, but definitely nice. It's basically 7% from. In 3 days. It's moved from the pivot. So that's definitely accumulation going on. You can tell. Beautiful 100% checklist. That's definitely something you should look for if you can. So that's really good. Could you buy it here? Probably would not buy it here. Wait for a little bit of a pullback, but it's looking very nice. Relative strength 97. That's very good. So yeah, EQNR definitely, definitely something that you could EQNR. So let's put that down. All right, so that's looking pretty good there. Thank you. And SLB. Let's get SLB real quick. All right. This also is looking good. Nice move off of the 200-day moving average. I like that very much. Schlumberger. This is an old favorite. Good company, and definitely something that is probably going to be more viable in the future because of the increased drilling. And of course, this is one of the largest oil service companies out there. The other large oil service company probably that you've heard of is Halliburton. So that's also one to look at as well. But SLB looking very good. Thanks for sharing on that. Definitely appreciate that. Thank you very much. All right, I think it kind of covers EQ and R, and it's looking pretty good. Let's look at ERLL. I don't know this stock either. ERLL. Let's see what we've got here. Let's see if it'll give that ERLL. Let's see if it'll let me. No. Okay, come on. ERI. There we go. Maybe that'll work better. Energy recovery. Makes energy recovery devices for seawater reverse osmosis, a segment of the such thing as reverse desal. I like this industry a lot, by the way. We're in a cup with handle format. That is very good. I definitely don't know this industry. ERII. I definitely like the area though. I definitely like the desal area. I think we're going to see a lot more demand for desal in the future. I think this is a smart one. We have very nice. This is what they call the golden cross right here, where the 50-day moves above that 200-day moving average. That is a very strong sign. That's a strong sign of accumulation. Also, we have accumulation above the average for the day. So that's also looking very good. Let's look at the checklist, kind of to see. Wow, that's an acceptable checklist, 67%. The only thing it's really failing on here. This is ERII. Put that actually in the chat for everybody. Let's put that in. Let's put the gift comments. This is ERII. So that's the stock that we're talking about right now. It's looking very good. It's got a blue dot special, which means that definitely moving up. So definitely, I could say definitely this is definitely actionable now, and something that
I wasn't gonna
it'll easily be a good one. So ERII is actionable.
Those are the two things.
Now,
Any other questions?
and let's see, buy point. We're right at the buy point here, aren't we? That buy point on stage 1 cup with handle 24.29.
Yes, that's what I'm anticipating. And
29. So you can definitely buy this one now. I wouldn't buy a full position in this one. I'd buy a half position, but it's looking very nice. Nice accumulation.
I have no idea what these.
I want to take a look at some fundamentals on this one too. Thank you for bringing this up. This is a great suggestion.
It could be.
We did just go through earnings. The sales were down a little bit. Interesting enough. Cash flow is good though. Interesting. 8%. Okay, 110. Okay, energy recovery.
They do it really fast.
Yeah, this is an interesting. Reverse makes energy recovery devices for reverse osmosis. This is a good business. And old hotels.
I'm gonna bump that.
Interesting. Very interesting business for osmosis. I think it has huge potential.
Yeah.
So thank you for that. That's Bible, and
I know
definitely thank you for that, putting that out there. This is interesting. So this is the biggest crocodile. Okay, that's interesting. I'm surprised that I thought it was Sun Oil. No, I guess I don't know. That's very interesting. Very interesting. Okay, so we did cover ERII. It's looking really good. EQNR as well. So they're all very good. How low can Tesla and Spider go? Let's take a look at everybody's favorite. Now, of course, this is going to be trading on a split basis tomorrow. It's Tesla, TSLA, of course, is the symbol on this one. The problem with Tesla, of course, is supply. And we have a lot of overhead supply on Tesla, and this is what's making it very difficult for it to achieve anything, move up. After hours, 891. It's up a little bit after hours, 894. So basically right at that 200-day line. Here's the problem that Tesla has. If we look at one of the last pivots here, it was right at 900. So we're going to draw that right along here. And what's happened is there were a lot that bought the stock way up here above this red line, and that you can't see it. Let's see if we can pan over there using for TikTok. So a lot of people you see that bought above that red line, and because they did this, that is what's creating what they call overhead supply. And right now with Tesla, there's a lot of overhead supply. Now it will split 3-for-1. So tomorrow it'll be in the $300 range, $295 probably or so. But I think anytime it gets up to here, there's a lot of people that are going to be selling. There's going to be a lot of selling pressure tomorrow, so it wouldn't be a buyer of Tesla. I just wouldn't be a buyer of Tesla right now. Now, let's look at the Spider. The Spider's been having issues as well. Of course, that is the ETF that covers the S&P 500. And it came up to the 200-day line right there. And then it got it's pulling back now. The question is, will it get support at that 21-day line? Looking like it is getting support at that 21-day line. This one could start to make a move up. For right now, I think we can't do anything here. Basically, what I'm doing here is drawing the line. This is the reversal line, so you don't buy it. And when it's a downward trend, it will eventually reverse and move higher. But right now, both of them just not working, unfortunately. All right, Matt's interested in taking a look at CF. This is a fertilizer play. This is kind of, I think, done. But who knows? This is called CF Industries. It's very strong. It was strong buying today. It's coming up to the 113.48 buy point. Now, interestingly enough, one of the things that's really constraining this industry, of course, is the lack of natural gas in Europe. So this is kind of where I think that you probably want to be on that side rather than the fertilizer side. But it definitely has made this base, and it may move higher. But right now, I'm not so sure. I've sort of been out of the fertilizers really since the beginning of the year.
So that's what actually
I do know that there's a lot of demand for fertilizers, but the problem is their feedstock. So it may not be as easy to deal with. So would I buy this one? Well, it's in a good position. Agricultural chemicals are doing relatively well. I'm currently not in this one. But there is a natural gas play that I would like to show you, and of course that is, and it's pulled back a little bit today, that is Cheniere LNG, and this is the company that liquefies natural gas. And so this stock is one you definitely probably want to take a look at. Oh, I guess it was up in the, and I didn't realize because I didn't check this one, but I've been accumulating this one. There you go. Yeah, we bought the half position on the 11th, and then we had it on the 2nd. We started accumulating it on 7/29 and at 148. We're currently at 171, so that's looking pretty good. And we're definitely accumulating a position there. And I do think this one is got legs. Now, can you buy it here? It's a little extended, so I probably would not be a buyer right here. I probably would be a buyer.
So,
hopefully my audio is back in here. Let me see if I can check my audio. There we go. Yeah, I've been having some always technical problems, it seems like, whenever I'm making any of these slide changes. So I don't know why this is the case, but it is. Just kind of frustrating. Here we go. Very good question. This is your thoughts on government forgiving student loans. Our school officials to understand. Yeah, not only is now, I guess there's just a lot of desperate people out there. So there's a lot of people that unfortunately have large student loans, and the problem is this really doesn't go far enough or do anything. Basically, what really needs to happen instead of forgiveness is we need to we need to revise the bankruptcy rules. We need to revise the bankruptcy because the problem here is that the student loan is the only debt that I know of where if you take out the student loan, you cannot declare bankruptcy and get rid of it. And so that is something that every other loan that you can do that with, even a mortgage, you can bankrupt on that. Of course, it's a secured loan, so you take back the house. The problem, this is the problem with, unfortunately, investing in a college education. Everyone has been telling you since the time you were in EI that a college education is the key to everything, but really, in reality, no. It depends on what degree, of course, that you get. Everybody knows that. And it also depends on where you go. So there's a lot of people who went to very prestigious colleges, spent a lot of money that they didn't have. They're part of the middle class. And they got degrees that basically were not very, very fungible. So that's a problem. It's better to go to a third-rate engineering school and study computer science than it is to go to a first-grade school and study philosophy, even though I really like philosophy. So that's part of the problem that we have out there. If we had reasonable bankruptcy rules in this country, it would be a lot better. But again, I'm not in the government, and I don't have any sway in that. So I just think it's a silly system, but it is what it is. I think it's just going to cause more inflation. It's not really going to help the people that need the relief. What really is needed is to revamp the bankruptcy laws so that people that are bankrupt can declare bankruptcy and won't be in involuntary servitude. That's kind of what we have now. All right, let's see. Here's this person called Manning Singh, 40. Thank you very much. Please cover ENVX. All right, absolutely. I'm going to go over and cover it really code. ENVX. And I don't know offhand. I don't know that. ENVX. Let's take a look here. Yeah, Invex. Okay, develops silicon. Oh, okay, like lithium-ion batteries. Okay, this is a lithium-ion company. A lot of competition in this field, but and I think it's probably easier, to look at some of the other lithium plays. But let's take a look at this one. This is definitely
I do know this
high
one.
density, longer life.
I've only seen it.
The bigger
other
problem with
alternative
this
spelling.
that I see is competition from companies like LG, Lucky Gold Star, and companies like that, and some of the companies in China. I just don't know if this company has the capitalization. I know it's in. This is kind of like what I was talking to you about. This company just probably doesn't look like it has the capitalization to play in this field. The problem with this business is this is a very, very high cost area to compete in. But it is looking good. I mean, 99 relative strength, it is trading above the 200-day line. There seems to be some accumulation here. Relatively thin stock. But I don't know a lot more about this and where it's at and what it's looking at. What I'm going to do is I'm going to take a look at the fundamental analysis on this one and get an idea on it's in Fremont, which is one of my still believe it or not, many years ago. Well, not that many years ago in Fremont. Received feedback from the business power to build and test cells for use with U.S. Army soldiers. Okay, well, that's interesting. So they've got a government contract. I definitely like that. It looks like it's pre-revenue. 56% in funds. It's losing about 76 cents a share. So here's the thing. It looks very interesting. This looks like a very interesting company, but I would avoid it. I would wait for a company that that's actually got profits. I think that's really key. I think it's really, really key. So too many uses to decrease being here. Absolutely. Well, part of the reason is that the whole education structure is overloaded with expensive colleges so people can't pay. And unfortunately, because of inflation, the prices have gone up to the point where it's very, very difficult for people to complete a degree. I really recommend that people that need to get a degree or want to get a degree, go to community college for 2 years. Take something like computer science or possibly accounting or something like that, and then get a degree completion university. They're definitely around. There's one here in Dallas called Amberton University. It's very inexpensive. It's cheaper than any of the schools. Then your master's somewhere that's good. But try to get a degree in electrical engineering, or if you can do that, you can do that, of course. Into that, computer science is good. That's helped me a lot over the years. And then possibly something related to business. So those are pretty good as well. And there's a lot of other stuff as well, as you can tell.
I'm going to look into this.
All right. Have you looked at BA recently? This is Boeing. Of course, let's take a look. It's coming from TikTok. This question is coming from TikTok. Boeing, of course, has some issues related to long-term profitability, I think. But it is a Dow 30 stock, so definitely something. I don't own it currently. In the Dow, I would prefer to own Apple over the stock just because, Boeing, it is moved up, but here's what's happened. It's come up to that critical 50 line. It's moving down. So I can't really recommend it right now. Relative strength 77. Sales are down. It's losing money. I just don't, I think Boeing still needs to be restructured, it's still a downward trend, and it's trading below the 200-day line. So I would have to say for Boeing, I think you got to just avoid it for now. I think it's very, very good. So I would avoid BA. I just would avoid it because it will come back. Now let's compare two Dow stocks and to see kind of which is the better of the two. I'm going to compare 3 Dow stocks. The first one I'm going to compare, of course, is BA. I think that's an interesting stock, of course. That's Boeing. Also, one of the other stocks that I would like to show you and compare to, of course, is Apple. And that's also a Dow stock. And then I think we could compare for kind of getting a good balance there. I would compare ExxonMobil. It's also a Dow stock. So if we look at the 3 and we're buying Dow stocks, definitely you want to be an ExxonMobil. It is so superior to all these other ones. Even though my stock of the day is Apple, because we're getting to a point where Apple is starting to make the turn and move higher. if we started a year ago and we invested $1 in each of these, $1 in ExxonMobil, $1 in Apple, and $1 in Boeing, if we invested in Boeing, we would have been down 25 cents. If Apple, we would have been up about 15 cents, which isn't bad. But if we invested $1 a year ago in ExxonMobil, we would be up 80 cents. So Exxon has appreciated 80% in 1 year. So everybody says there's no good stocks out there, but that's because they're looking in the wrong places. They're looking for the technology place, whereas this year has been a tale of the big industrial oil companies, Exxon being one of the leaders in that. So for Boeing, I would say just put it in your hat, but don't do anything there. And I've got a question from TikTok here. Thanks, Mana Singh 40. I think that's right. Is Apple viable at this level? Absolutely, it is. And I definitely think Apple is on the upward trend. It has just kind of moved beyond a very key level. We have a 200-day moving average that's pointing up. So let's go back to that chart for Apple. Now, this is the number one holding of Berkshire Hathaway. Not that I normally like Warren Buffett's stock selection, because I'm a trend trader. I'm not a value investor like he is. But this is the reason that Apple is giving us a buy signal here is because it's come down to that 21-day exponential moving average. It's getting support there, and of course, it's a very strong stock. So they will have very nice earnings coming up. So I definitely think they're going to be able to solve some of their supply chain problems. And so I do think that now Apple is viable. So definitely that you could definitely buy at this level. So it's a good level to buy Apple at this moment. All right. Many all-time highs. That's true. Yeah. Yes, Charles, we've been screening. Yeah, absolutely. These timbers are doing well. Yeah, I appreciate all these comments that I'm getting from YouTube. It's great. I mean, thank you for doing some of the screening. I do some of the screening, but having your input, having everybody's input here is just invaluable because we are seeing a movement right now. I've been in cash mostly all this year. Except for the oil stocks, I've been mostly in cash. I'm now starting to move the market and starting to see it kind of make a move. So hopefully it'll stick for a while. All right, let's look at SQM. This is from Mr. Cheat. Thank you so much, Mr. Cheat. SQM. Let's take a look. All right. Oh, yeah. This is the top lithium producer in the world. This is a company, of course, in Chile. And what's great about this company is the Chileans are very good in the mining fields. They definitely they're state-of-the-art mines in Chile. The great thing about the Chileans, especially this company, is that they really know how to produce the lithium. Many of the other plays, they're just that. They're just mines that are in development stage. This mine is a working mine, and along with Albemarle and a few of the other companies, these companies are really producing lithium. Of course, that's the primary mineral that's needed to produce the lithium-ion batteries, which are so important in the electrical vehicle and power applications. But looking very good. We're coming up with a cup with handle. We've pulled back nicely. We have a let's see if it's a cup with handle, stage 3. 113.70 buy point on this one. Up after hours, relative strength is 97. This is looking very, very good. And of course, this is the Chilean specialty producer. And by the way, these are also a large producer of copper, which is also interesting. This is one of the strongest miners out there, and it has a 89% rating. The only thing it's failing on is the accumulation and distribution. So we are, and I don't quite understand why we're not getting more institutional interest in this because, well, I understand because this is a commodity play and typically funds, unless they're specific to it, they don't usually accumulate this. But lithium is a very, very good mineral to be long right now. As we know, in a period of inflation, it is the commodities. That's where you want to be, the commodities. That's why ExxonMobil is doing well. That's also why some of the gas plays that I've been talking about are doing well. Why? Because in a time of inflation, you want to be in commodities. And that's definitely in the lithium space. This one, SQM, the Chilean, this is essentially a Chilean it has been doing extremely well. The sales for their lithium up 342% quarter over quarter, and profits up 871% quarter over quarter. Can you believe that? That's tremendous. Also, we have an increasing amount of interest from some of the funds, which is good. 461 major funds currently own this. About 27%. Now, some of this is owned by the government, I believe, in Chile. I'm not exactly sure. This has a PE ratio of 14, which is quite low, and a cash flow of $2.80. Now, of course, this is translated to dollars because, of course, it is a Chilean company, not a U.S. company. But this is the return on the equity here, 22%, so very, very strong. So this is definitely one of the ones that I like in the lithium miner. Let me compare two lithium plays for you in stocks. The first one, of course, is this one, which I really like. Yeah, there we go. Okay, there we go. It takes a second for it to clear this memory. Looking very good on this one. The other one I like is Albemarle, ALB, and this is the largest lithium producer in the world. It's not. And then also I want to see if we can look at the ETF for that to also compare that. So I think that's LIT. I think that's, is that right? No. Did I get that right? Let's see. LI. No, I didn't. Okay, well, let's just compare the two. Let's compare Albemarle, which is one of my favorite companies, of course. That's the largest lithium producer in the world, with Sociedad, and I cannot pronounce it. I cannot pronounce it, but this is the very large Chilean industrial company that is a miner and outside of Santiago. Very strong company, and this was done very, very well. So if you bought a year ago, if you took $1 and you bought the Chilean miner, you would be up about $1.05. With Albemarle, you would have been up 25 cents. Both very good, but obviously the Chilean one is probably the one. So SQM is definitely one that you want to take a look at and possibly buying there. Now, here's the thing about this one. It's in a buy point. It's in a buy stage. Again, very strong checklist here. We have 89% checklist. The pattern recognition on this one. This is my AI pattern recognition coming out of the base. We are at the pivot on this 113.70. We're at 102, so we're a very good place to buy this right now. So this is also, I definitely have a buy rating on this one. So this is one you can also take a look at possibly and buy. So I'm going to put that out there. And I have not bought this one myself, but SQM is a buy right now. So there we go. And let's put it out there to everyone on TikTok. All right. Thank you again for that. All right. Well, it's come to almost to 45 minutes. I'm almost out of time. Let me see if there's just one last question I can take. Dear Jim, Dear Jim, the background, I'm sorry. There's a lot of background noise. I apologize for this. Let me see if I can switch over. Again, I'm having issues. See if I can see this. Yeah, hopefully this mic will will be a little bit better. I apologize for that. Just, it's always technical problems with me. I should be better at this than I am. But anyways, I'm not. So there you go. But here's the thing that we've got. Some ones that you want to take a look at. The the oil company definitely like this. So let's put up let's put up some of the symbols that we covered and that are buyable right now. So I'm going to do that. So let's see, we've got EQ in R, that's buyable. Although EXII is buyable. Of course, SQM is buyable. Apple is buyable. So those are ones that are buyable right now. So if we're definitely seeing a lot more opportunities right now than we have been in a long time. But I want to put those out there. EQNR, of course, that is the Norwegian oil company that has a lot of gas, so that's very good. EXII, should I got that right? EXII, let's check that really quick as well. Did I get that right? No. Why am I always having so much problems? But I always am. Well, anyways, that is not coming up on my system. So look back here. Let's see. All right. Okay, I'm looking here. ENVX cost, time to sell. ENVX, let's look at that real quick. So this is buyable. All right. Come on. Come on. Try to take that down. All right, let's see if this is ENVX. Yeah, let's take a look at this. Okay, there we go. This is the one. This is the lithium-ion batteries. I would be careful with this one. I wouldn't buy this one. All right, so let's see if I can get to the last one. Hi, Dennis. Appreciate it. Are you a day trader? No, I am a swing trader. I'm a swing trader. All right. Oh, BTU. This is an interesting one. BTU, of course, is this is Peabody Oil. Peabody Oil. This is Peabody Coal Company. It's the largest coal company in the U.S. And it is probably the only. If I was going to play the coal, and I'm not playing coal right now. This is the one I would play because I think it's the one that has size, and this is a significant. Peabody Energy, it's on the double bottom, coming up to a buy point. Not really totally excited about this one, but this one just keeps producing cash because everybody in the government hates this company, but it just produces cash because everybody needs coal because basically we have coal-fired power plants. This has a PE ratio of 5. So if you're to buy this stock, which is $27, you're going to get about a $5 dividend and cash flow every year on this one, if you can believe that. And it's one of the largest coal producers in the world. About 57% of this is owned by funds. And the estimates for this year for the profits to increase 111%. That's pretty amazing. And of course, nobody wants to talk about this one because our government hates coal companies, but I certainly don't. All right, so thank you very much for that. I'll be back tomorrow at the same time, but that's definitely buyable. Charles, BTU is definitely buyable. Good company. And I'll be back at 5 tomorrow, hopefully. Happy trading. By the way, just wanted to put it out there. Always, I need your help. And first of all, if you could like the show, that would be really great. That helps us a lot, gets us out there to people. We're not getting out as many people as we'd like. I've got to figure out something on social media strategy here to get out to more people. We certainly have a lot of loyal people that watch, but we don't seem to be growing the pie. So I'd like to grow the pie. So please like this, subscribe. Really appreciate that. If you're not already in the Axe Trail, it's super duper easy to get in there. Just all you have to do, this is free by the way, is go to www.Dallas Trading Floor, first and last name, and we'll get you all set up. And this is of course for free. And we send out letters every now and again, usually about 1 or 2 a week, and we'll get you all set up on that. So I will be back here tomorrow at 5. Thanks again, everybody. Happy trading, and stay safe out there.